If your chart looks like this and you would prefer it look like this, then I'm going to show you how to simplify your chart and which indicators are actually useless and what tools you can use to actually be a successful day trader. Okay, by default on TradingView, your chart should look like this. No indicators, red and green lines. The two most important tips I'm going to give you first, because most people aren't going to watch this video till the end. The best thing that you can do for your chart is to change the candlestick color. Red and green have psychological effects on your brain. When you're in a long position and you see a red candle, your brain is going to get triggered and you're going to be like, oh man, maybe I messed up. This is a bad idea. I should get out of my trade, because psychologically red is stop. So one of the best things that you can do is change your candlestick color to something very neutral. All you have to do is right click on the charts and click on the settings, and you're going to change these to something more neutral. Bullish candles can be white and bearish candles can be gray. So if you're in a long trade and you see a gray candle, you're not going to really care that much. It's not going to emotionally trigger you. But because we're doing a tutorial and most people understand red and green candles, green go up, red go down, we're going to stick with this. Now, the second most important thing that people make a humongous mistake on is their oscillating indicators, like the relative strength index, the RSI, or the stochastic RSI, or the TSI, which is the trend strength indicator. I need you to just pick one, and I would prefer it to be the RSI, because they are all trend indicators. So having two of them line up means absolutely nothing. Having four of them line up is not four confluences. Choose the standard RSI and leave it on default settings. And all you have to understand is, if price is in this top half, it is bullish. If price is in this bottom half, it is bearish. The momentum is weighted to the sell side, or the momentum is weighted to the buy side. Now, I've got videos on this explaining divergences, but the reason I like the RSI among all of the oscillating indicators is that when price is showing a downtrend, creating lower lows and lower highs, yet the RSI is showing the opposite. When the two lines go like this, that is a divergence. So it's a slowing of the momentum to the sell side when you have one of these divergences on the bottom half. So if you're in a sell and you see one of these, get out. It's kind of simple. Again, a million tutorials on this channel about that. Now, if you have an oscillator up and it's still messing with you, I would suggest keeping it on and just double click the chart where the price candles are, and it'll hide the RSI. And then double click and it'll show it. So if you need it as a reference, you can hide it, show it, as you please. Keeps your chart way cleaner. Now, a lot of people are not fans of trend lines. I'm going to show you why I am. Now, let's use the most commonly traded pair in history, Euro USD, as our example. I've got it out to a 30-minute chart so you can see lots of history, and all you're looking for is multiple touch points on highs in a downtrend and multiple touch points on lows in an uptrend. You might think they're stupid, but basically trend lines are like moving support and resistance. For example, obviously this was an area where price rejected off of numerous times. Once it was able to break through, it used it as support a few times before it broke through to the bottom side and used it as resistance. Trend lines are simply that, but while price is trending. Resistance is pushed lower as the sellers take control. Now, so far, these are all free tools that I've showed you on TradingView. You have your trend line indicator, you have your rectangle tool indicator, and you have the relative strength index. I suggest putting stars next to the ones you use the most so they're just stuck in your favorites tab right there. Now, still keeping your charts clean. We're just using tools as a reference so that we can make better trades. So you can see we were in an uptrend right here, and then we started going down. One of my favorite tools to use is the Fibonacci retracement. When price has a very strong momentum move down and then starts retracing, you can draw a Fibonacci tool. The goal is for the retracement to get to the gold zone. Doesn't happen all the time. And every time a move pushes past and breaks previous structure, we draw our Fibonacci tool. It got to the gold zone and rejected down. We set up limit orders in the Fibonacci gold zone with a stop loss in between the 618 and the 1 for a short position, and a take profit at the previous low assuming price will hit a double bottom. And you'll usually get a 1 to 2 risk to reward ratio out of trades like this. And this only works when price is trending. Price pushes down in one direction, retraces back up, regains momentum, and pushes back down. And this is how trends and those staircase patterns are formed. Now, one of my favorite indicators lately is a paid indicator. You don't have to use it if you don't want to. Everything that I showed you so far is going to be just enough for you to trade successfully. But it's an indicator called Happy Trail, gives you smiley faces as your buy-sell indicators, allows signal repainting. And what you want to do on the style is uncheck all of these boxes right here and turn off case 1 and turn on case 4. And because I'm old, I increase the symbol size to small. That will make the symbols a little bit bigger. I've been having fantastic results with this. But all you do is enter in a short position on an upside down smiley face, stop loss couple ticks above the candle in a sell, shooting for a 1 to 2 risk to reward ratio. This is specifically for those people that are struggling with their entries and don't know what they're looking for and want a specific candle to enter on. This is really going to help you out. Access to this indicator plus 7 other indicators, a Discord community, daily trade setups that we give out to the community so that you can earn money while you're learning how to trade, as well as an A to Z day trading education, weekly live streams and Q&A sessions with me. We're doing a Black Friday sale, so it's 50% off for the entire year. And as long as your subscription doesn't lapse, you have that price for life. trdfloor.com. And since we're talking about Black Friday deals, TradingView, this is the only time of year that you should ever buy TradingView. It's like 60 to 80% off. I think it's 80% off this year. It's absolutely insane. And I actually renew my subscription on TradingView every single Black Friday just because it's such a slamming price. The reason why I suggest the Pro plan or the premium plan with TradingView is because you can have multiple indicators and you can have multiple alerts. Multiple alerts is the most important thing. So let's say you don't have time to be on the charts all day, because you have a full-time job or a full-time family. You get an alert when a signal prints, you get in a trade, and then when price hits a specific level, you can hit the plus icon and get an alert at that price level. Or if the trade starts going against you, you can hit plus and add an alert above where you entered. This way you'll just get pinged like, hey, my take profit was hit. Hey, my stop loss was hit. And that's it. But you can't do that with the basic plan on TradingView. So the first 2 links in the description, access to the Happy Trail indicator, huge Black Friday sale, 50% off, and huge Black Friday sale on TradingView, 80% off. If you're serious about trading and you want to be a full-time trader, you need the right tools. This is the best time to buy it. Anyway, hopefully I was able to help you clean up your charts a little bit. You got some value out of this video. Drop a like on your way out and we'll see you in the next one.